Hi, this is Stock Investor Davis. Let's take a look at Lindy, reviewing its 2023 quarter two, looking ahead to its quarter three and full year projections, and closing with a technical analysis of the stock price. Please like and subscribe. To start, we'll begin with its income statement for quarter two. Highlighted in yellow are figures that are worth noting. To summarize, we see a slight dip in sales, but relatively flat compared to prior year, from $8.5 billion to $8.2 billion. Also seeing a bigger pullback in cost of sales from $4.9 billion to $4.3 billion, leading to an improved gross profit margin. Scrolling down to its operating profit, we see a major jump in profit from about $590 million to over $2 billion. This big improvement stems from a decrease in other charges from nearly $1 billion down to $22 million. We'll review this charge further soon. Wrapping up this slide, we see the operating profit flow down to its net income and earnings per share. This slide shows a breakdown of its diversified end markets and its year-over-year growth and quarter-over-quarter growth. We're most interested in the industrial markets, making up nearly 65% of its revenue. These end markets show to be more cyclical, hence seeing that sequential growth in these markets is positive. Moving to another breakdown of its quarter two results, I'm homing in on the 4% improvement to its operating profit quarter over quarter and increases to its operating profit percentage going from 23.5% in second quarter 2022 to now 27.9%. Taking a step back to its income statement for the first half of 2023 thus far, we see a similar story to that of the second quarter, more or less doubling each line item. Again, the most noticeable change is the other charges declining from nearly $1 billion to $22 million. So what is that? The other charges are stemming from the Russia-Ukraine conflict. Since Europe and the US imposed sanctions on Russia, Lindy has reassessed its Russian subsidiaries and can no longer exercise control over those entities, thus deconsolidating its Russian gas and engineering business, resulting in a loss on $787 million and impairments of its Russian assets for another $114 million. So that was the big change that we're seeing. Shifting to its balance sheet, we highlighted many items signifying big changes now compared to year-end 2022. We see cash down about $2 billion, lowering its total current assets and leading to a less than 1 for a current ratio, which is not ideal. Also noting goodwill going up, signaling a recent purchase, which we will discuss shortly. We're seeing improvements in its current liabilities, which is likely why we see a decrease in cash. Short-term debt, its current portion of long-term debt, and other liabilities each show a decrease in balance. However, the company has added to its long-term debt. Then its equity section, we see its retained earnings decrease nearly $13 billion, which we can assume was used to increase its treasury shares, which went up roughly $13 billion. Looking at its cash flow statement, we have highlighted the bigger fluctuations in cash flows, including more net income to start, which we covered in its income statement, its other charges dramatically shrinking, which we covered as its departure from Russia, noticeable changes in its receivables and payables, which we can consider a difference in timing. Then we see a pop in acquisitions from $44 million to $834 million. We will cover this in the next slide. Before that, The other noticeable changes include short-term borrowing repayments increasing and a continuation of purchases of ordinary shares. Here we have the acquisition details, which also cover the increase in goodwill from the balance sheet. The company acquired nexAir, which Linde had already owned a minority share, 23%, and now owns fully, adding to its gas distribution and welding supply end markets. The chart on the bottom shows the full detail of the purchase, also noting this acquisition has added nearly $200 million in sales this year so far. Overall, not a major purchase at the time compared to Linde as a whole, but hopefully adds to its success. Looking ahead to its guidance, Linde provided two items worth noting. First, it's expecting its quarter 3 earnings per share to be around $3.50, and its full year earnings per share to be between $13.80 and $14. We'll continue tracking those figures to see how close the company can get, if not exceed, hopefully. Also worth noting is its plant and gas backlog reaching nearly $8 billion. This provides a nice safety net in terms of expected near-term revenue, as this is about as much as the company makes in a single quarter in terms of sales. Taking a look at what the analysts are projecting, we see they are projecting near the top of the range for its next quarter and year-end earnings per share. Also expecting revenue to increase nearly $400 million in this quarter compared to what they just did in quarter 2, which seems reasonable. And full year revenue of more than double its halfway revenue by about $500 million. Again, reasonable. Looking at the technical analysis, LIN, currently trading at $377, continues its uptrend that began in March 2016. The bottom of the range is 362, and the top of the range is 400. It appears to be at a discount. Thank you for watching. Please like and subscribe.